Hello, welcome to another episode of Mortgage Chicks with Hot Tips. I'm Kim Hairstead.
I'm Elizabeth Hull.
I'm Stacy Van Skank.
I'm Cindy Walker.
Today we're going to talk about reverse mortgages. And I know that in the past, a lot of people think of reverse mortgages as a bad thing. They're going to take my home. They're going to do something I'm going to lose all my money. I'm going to lose my house. My kids aren't going to get my house. Well, these things are just not true. You have to be 62 in order to qualify for a reverse mortgage, and only one person in the household has to be 62 in order to qualify. The terms of a reverse mortgage it's called an open mortgage, meaning that it doesn't ever have an end. There's not a 30-year fixed or anything like that. It will go on forever as long as you live in the home as your primary residence. So what happens is you have an ARM, you have a fixed rate, and you also have what we call a LISA. And the LISA collects taxes and insurance on your behalf, so you don't have to pay taxes and insurance on the loan as well. So these are some different types of mortgages that you can get with a reverse mortgage.
Sometimes I hear people want to know, well, how much can I borrow? How much equity can I borrow from the home? So what they're going to do is, and it depends from lender to lender, what's important is there is no loan limit. We have conforming loan limits, jumbo loan limits. There is no loan limit, but it's going to be 40% of the equity at the time of the loan being originated. And then as time goes on and you get more equity in your home, you can withdraw more money. But it's just 40% of the equity of the property is what the loan amount's going to be for. And there is no cap on the loan amount. And I hear that a lot.
Yeah, and what I hear the most, because these loans are great for if the circumstances fit you. But the biggest thing is I hear, oh, well, that means they're going to take my home. And that is not the case. As long as you live in the house at least one day a year, you or your family member have up to 12 months to pay back the home or pay off the mortgage that was secured. So in some cases, they can even get additional time. The other question I hear a lot, and I believe that you have to do this before you can even take the loan application, is you do have to take a class so you can educate yourself. So you'll learn much more about the process. And I don't believe both, like husband and spouse, have to take it. But if the property's in a trust, everybody in the trust must take the home education class.
It's recommended. It's a good overview of the whole process.
Well, especially with all the misinformation that's out there. So, it's important you really educate yourself on any kind of loan, but when it's specific with these, it's really important.
It's very
helpful.
helpful.
That's just like the first-time home buyer, programs we have, or bond loans where they have to take that course, an 8-hour course. But we want to set the clients up to succeed and not fail, and truly understand not only the process, but terms of loan and how to make the payments. In a reverse, you're not, but I think it's really important that people understand all of the terms. So taking a class shouldn't be a deterrent.
It's not a big thing either. You just call up, make an appointment, and it's over the phone.
Yeah.
So you don't have to be in person to take those classes.
Another topic that comes up quite a bit is how do the borrowers get their money? So there's several different ways that they can get paid. They can get a lump sum at closing. They can get put into a checking account monthly if they set the terms up front on that. But they do put limits on how the funds can be used. They just want to make sure that you're not reinvesting the money you took out of the equity of your house and putting it in risky investments.
So no going to Vegas?
Lose the money.
No going to Vegas.
No going to Paris, nothing like that. It needs to be put in the bank and just used for quality of life. And they also sometimes will limit you on how much you can draw the first year. So you just have to make sure of those terms up front.
Yeah, there's many different types. If we went to list them all, it would be monumental because there's a lot of different terms.
But especially in our state, loans like this are very good to people on fixed incomes, that maybe need a little extra money. They actually have all the equity in their house.
Basically, you have that loan, the interest is accrued on the end. So when it's time to sell your home to your heirs or pass it on, all they're doing is paying off the loan and the interest accrued over that period of time. They don't take your equity, so you can still sell the home. So it's really
governed by FHA.
Yep, it's governed.
So they don't ever allow for a negative equity position on
exactly.
these loans.
Yep.
They can't take your house because you're upside down on it, because that can't happen with this type of loan.
Right.
You know, back in the day, I think these loans got a lot of bad rep.
They did.
Because they were new, they were complicated. You know, even FHA, the Federal Housing Authority, didn't really know the parameters of these loans.
How it was gonna
And
play
they've
out.
gotten better and better and better. You know, as the cost of living has gone up so substantially in the last couple of years, people that have Social Security or fixed income, now suddenly they can't afford their prescriptions.
Yeah.
They can't afford
Right.
their groceries or gas. So these loans, like I said back in the day, they had a bad reputation, but now these loans are saving people's lives.
Yes.
And you know what I
So
love
true.
too is that, you know, at Van Dyke, we are originating these loans in-house. We're not brokering them out. So you have a direct person to contact throughout the entire process, which is a big deal. You know,
Yeah, they take a little time.
the children, you know, something I hear all the time is the children think, okay, well, when my parents pass away, or the heirs, let's say,
Right.
and my parents pass away, the bank's gonna take the house.
Yep.
But from what I understand, what I recall on this loan is they have about 6 months to sell the house before the bank wants their loan, you know, due.
And
Up to 12 months.
Yeah,
I
up
was
to
gonna
12.
say, they
Yeah,
increase
it's up to
that.
12. And sometimes they can get it a little bit longer. But I mean, and think about this on the big equity boom we just had here in our state. So to be able to pull that out, because again, like you're saying, groceries have gone up, gas has gone up, but Social Security is not going up at the same rate.
No.
No.
And retirements
No.
and things like that. So
And if you
again,
wanted to sell your house and move, you're going to be jumping into where you're going to go.
Yeah.
And
how
where-
much
how
is
you
the rent
gonna-
gonna cost?
Yeah, how much
Yeah.
is your rent going to cost? You may be able to take that equity, but what are you going to do with it?
Right.
You know, you're going to go have to rent somewhere else or something, you know. So it's a good thing to just take your equity and stay where you are.
There you go.
It's a good program for a lot of the senior citizens in the area.
Absolutely.
And you only have to be 62. It's not like we're talking. You
I
have
know,
to
why
be...
am I saying senior
I know.
citizens?
I'm knocking on that door.
Like, I might qualify for one pretty soon.
Yeah, I'm getting close. So if you have any more questions about reverse mortgages, please feel free to reach out to Mortgage Chicks. You can reach us, you can see us on our YouTube channel, Mortgage Chicks with Hot Tips.
And if you have any questions or have topics you would like for us to discuss on our podcast, please email us at mortgagechicks@vandykemortgage.com.
And our episodes are also available on where you like to listen to your favorite podcasts.
And we would love to have you follow us on our Facebook page at Mortgage Chicks with Hot Tips.